Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on Sunday, October 11th, 2020 with a weekly Forex market analysis for you. And we're going to take a look at what's going to happen in the week ahead as far as news and the technicals and the fundamentals. And before we do that, we're going to pull up our disclaimer real quick just to remind you that this webinar is for illustrative and educational purposes only. And also, for one quick plug, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. That's Forex markets, stock markets, options markets, futures markets, you name it. So now we're going to our live action screen here. So we're at the forex-trading-unlock.com website, and I already on the navigation bar pulled up the workstation page, and we toggle down to it, and here we can see our numbers that are coming up for the week ahead. So for Monday, we have for the British pound, we have the retail sales, which is coming out. For the Japanese yen, there's a money supply number. Kind of mediocre, medium of the road numbers as far as we're looking at for Monday. Then on Tuesday, we have for the euro, because of Germany, with the German CPI. Then we also have for the pound, we have the unemployment numbers for the UK. That's another thing that's going to probably be something to watch as far as whether or not the pound can be resilient in the show of strength as of late. I got a feeling that it's probably not going to happen. Then there's also some EU and German numbers that are coming out, but then also for the US dollar, we have the CPI that's coming out as well. Let's see, then we have consumer sentiment for the Aussie, or New Zealand rather. That's also important, but still a medium of the road number there. And let's see, then for October the 14th, we have industrial production for the EU. That's going to be a big number to watch. PPI for the US, that's going to be a big number to watch. And let's see, we have the unemployment rate also for New Zealand. And then we have October the 15th. We have, let's see what is coming up on October the 15th. We have the jobless claims in the U.S. Obviously, import prices, that's going to be something to check out. The Philadelphia Fed number, which is usually a medium number, that is something to watch to see whether or not it does give any gyration to the dollar. Then let's see, the crude stockpiles, that really doesn't mean anything. Well, it does for the stock market, but I think that that's not going to be anything of a surprise. And then on Friday we have, let's see, just some minor numbers really. Well, no, we have total trade balance for the euro. So that's a big deal. Retail sales for the United States. So that'll be a bond number, currency number, absolutely. So that's pretty much mostly medium numbers until the end of the week. Now let's pull up our chart here. We have the dollar index already in line for us. Let's just straighten this out a little bit. There we go. Okay, so we have the dollar, which has been in a downtrend now for quite some time. As you can see, the whole of this year, this market has remained a bear, especially since it's fallen off of its high that was set back in March. Okay, there we go. All right, so we did kind of poke out of it a little bit here, so we can move this to, well, let me move this dot here. Okay. So the overall trend obviously is lower. Now, if you look at this on a big wave theory, you could look at this as an initial 1. This is a 2. This is a major wave 3 down with a potential 4 bottom, or 3 wave down with a potential 4th corrective wave here. Now the question is this a complete 5th wave down? Is the dollar index going to make new or move lows, or is this the beginning of a rounding process? And right now it's just the last little gasp of pressure before the dollar bulls come raging back. Anything can happen, obviously, but let's just take a look on a fib level at what we're dealing with here. So if we take off the last low and we go to the high currently, and now we make the chart a little bit bigger. Okay, so this is our dollar index where we're trading at currently. Let's get ourselves a horizontal ray. So the 50% level we have already fallen through since we made this high. And the 0.618 level is right here. And then we have this kind of support area, which just happens to be just the way it's been for the past month or so. So basically, above 92.68, the dollar index has been relatively bobbling off of that. It spiked below it, but hasn't been able to maintain it. Now we are currently in another downtrend, but we had made a higher move high. We have still not taken out this low here. So this is another key low that I think you have to really pay attention to, because if we don't take this low out right here, which is 92.68, then we are doing what? We are not making lower move lows. So remember, in an uptrend, you make higher move highs and higher move lows. So if we start to bottom here, which this could be a very good chance of this happening, oops, I can get rid of that, this week. So for all we know, tonight, the dollar could open up, or open down, rather, and then the bulls all of a sudden come into play, and then tomorrow the market reverses in a big way. Is that going to happen? I don't know. We'll see. Right now, it's the way it ended on Friday was pretty dramatic as far as a sell-off. It looked like the dollar was trying to gain some strength, and then it fell out of bed to end the week. So we'll see what happens with that. So now let's look at the major components of the dollar index to see why the dollar index fell apart and what's going to happen with it moving forward into this new week. So far we have no questions on the chat line, so we're going to just jump back into our analysis here. So for the euro, you can see it had a nice explosive rally after having had a short-term sell signal a few sessions earlier, and then all of a sudden, boom, higher move highs. However, this is a market, too, where it has made lower move lows. It has failed to make higher move highs overall. So I think that as long as the market stays below this $1.1921, this market will remain in a bearish posture. I would be very leery of this current rally that we've had, and I don't think it's that sustainable. Doesn't mean that it's not going to be a big bull and breach to 119 and keep on climbing into the $2021 handle. But like I said, I write numbers that are coming out. And then just especially just with the fact that we have all kinds of trade agreements that need to be met and some other things that are going on with the interest rate variables, the spreads between the euro bobble, the euro shots, and their interest rates versus especially the U.S. interest rates and even the Asian interest rates. So there's some weird spreads going on there, which means that, to break it down shortly, is that it's very restrictive, where it's hard for the euro, for instance, and the pound to gain versus the dollar, but not necessarily the yen. The yen could actually still remain strong, and we'll get to that in a little bit. So, but right now, where are we going? Where are we going to look to see for this market to stop here? Well, I'm looking right around. Let's move this over here. Okay. Let me raise this up just a tad. All right. So where are we here? Boom. So remember the dollar index? Looks almost the same, doesn't it? This right here is so identical. But remember, this is one of the currencies that has the most weight in the dollar index. So we're coming into this area, which we had talked about already last week, that's kind of where we're looking for the bullish currencies versus the dollar to fail. So that means the euro, the pound, and what have you most likely are starting to get into this area of resistance that, at least in the short run, for a couple sessions, I could see it being sideways to lower. And if this truly is in the beginning of a bear trend, this would be one of our last best times to sell the market before it really turns to support for a while. How far can we go as far as a breakdown? As far as going to the downside, I see this market has a good chance of being able to get down to $1.15, $1.14 area, somewhere down over here. And I think it has a more likely chance of doing that than it does going up to $1.2021. However, there is something you have to pay attention to. Do not forget that this head and shoulders sell pattern that really has us on the bearish campaign to begin with. See, here's a shoulder, here's a head, here's a shoulder. This downward sloping resistance line, it was breached a week ago. So it could be by attrition, or it could be because it's bullish. But just remember that this is a key area. You want to watch out for this pivot at $19.21. As long as the market stays below there, I think we're coming into the sell zone where all of a sudden the market's going to turn. Now let's look at the British pound US dollar. Well, so far we have chat. All right. So on U.S. dollar, like a balloon underwater, really made a aggressive move higher on Friday to end the week. This is another one where, once again, I really don't see the ability for this market to maintain this bullish posture, especially having this vertical slope that it has. Now, I would key off of the low from a few sessions ago. A failure from here definitely would have us confirming a bearish nature and heavier trading pound dollar for the next week or two as we head into the U.S. elections. Like I said, there's trade deals that have to be negotiated. We have the U.S. elections, and there's a whole bunch of other variables that impact this as well, because just like there's a new trade deal with the UK, we have a new one with the EU as well. So there, obviously, because of Brexit, we have separate deals going on. So that'll be interesting to see how these manifest and which way the UK will go and which way the EU will go and how much similarities or dissimilarities they will have. These are all things that I think weigh on the pound just like they weigh on the euro. So I believe that what we're experiencing now is a corrective move in the middle of a neutral to lower trading market, actually. So I would be very careful buying at these levels. If you're already in, I would say work your stops, keep them tight. As far as selling, I would still wait for a signal. Right now, we're still buffering up against some key resistance. There's nothing to say that this can't still get a nice explosive move yet on Sunday once the market opens going into the Monday's trading session. So we'll take a look at what happens later on in the week once it starts to unfold. And let's see how the U.S. dollar Swiss is shaping up. Now, this is very similar to the euro and the pound in the sense that it has really taken the steam out of the dollar. I mean, you can see now this is what's kind of crazy is look at how radical of a downward move the U.S. dollar Swiss had. Usually the pound will have a much bigger range than the euro, and the Swiss will have smaller range than the euro as well. So it's kind of like pound, euro, Swiss as far as how much volatility when they're directionally trading in a similar way versus the dollar. Friday's sell-off definitely has this market. I mean, it's settled on its lows. That's pretty bad. So, but this is also an indicator of strength or weakness for the euro. So I think that if you see any pullback here, I mean, this is a very vertical slope to the downside. This is just an upside down chart of the euro US dollar for the most part. Then if this continues to slide, well, then obviously all bets are off, and the bears are really definitely going to take hold of the U.S. dollar Swiss. I mean, not just the U.S. dollar Swiss, but many other currencies where the dollar bears are going to start to really romp. So that's just like we have our base marker for the euro and the pound. We have this at 90.47. Anything below here would have us definitely in a very bearish campaign. But right now, as we are still trading above it, I have to say that we are going to be in the buy break forecast, looking for a higher U.S. dollar Swiss trade. Not necessarily a major bull or anything, just a neutral to higher swing trade. Now, we mentioned the U.S. dollar Japanese yen, so let's take a look at that and see what's going on. Hey, we got Lock Power that's listening in on us right now. Hey, how you doing? What is your option of the U.S. Canada? Okay, we can go jump on the U.S. dollar Canada for our viewers this afternoon. So here we are for Lock Power. Give me 1 second. Okay, so we have the U.S. dollar Canada for one of our viewers. We're going to do a little breakdown. So let's see. I'm going to put this up here. I have to do a little fib level here. And then we'll do a little of this too. All right, so let me find out our target areas, and then we'll take it from there. Okay, we've already gone through that, and let's go to this. All right. Okay. So let's make this a little clean for you. Okay. So for our question here, what do I think of the U.S. dollar Canada? Well, now the key thing is that we know overall this market has been breaking for quite some time. It started a corrective move higher at the beginning of September and has continued to follow through into through the end of September into the beginning of October, and now boom, the bears have come back. Now, this is coinciding with the U.S. dollar slide. So the dollar as a whole has been getting battered for the past 2.5 weeks against all the major currencies. So I think that obviously it's been going with that relative trend. So the question is, are these dollar bears really going to be able to maintain their posture, or is it going to reverse? If this market really is beginning to be in a position of bouncing, this would be a good area for this to happen. So let's look at the longer term trend here. We're going to go all the way back to the beginning of this slide. So the Canada has just, literally demolished the dollar over the past half a year as the coronavirus happened. By attrition, we came out of this long break, and then we all of a sudden, originally when this happened, I was worried that this exactly was going to be just a sideways trade. We had this explosive bounce, and then it seemed to find common ground here and really just be basing. Now we've fallen through it on Friday. So this is kind of a big deal. The fact that we fell through here, that gives me a little bit reason to believe that we are now having divergence when it comes to some of your major currencies. So this was the low right here. And as you can see, I'm going to change this color just so it makes it a little bit more clear. Okay, so this low right here where we settled, this is a big deal because settling on this line and also taking it out confirms what? Higher move high, lower move low. So that puts us into a sideways forecast, a negative forecast for the US dollar Canada. So while with the euro and the pound and the Swiss, where I'm looking for them to kind of run out of gas right now, not so much with the Canada. So I would say your breaking point right now would be that if you were bullish, everything above this $1.3085 would be, if you're very bullish, this would be the point to do it, to be a buyer. And then we have below it here where I have to say that any failure from this fib level at $1.3085 really will have us most likely targeting new move lows, going down and literally taking out new monthly lows, multi-month lows. So if you're a bear right now, I would say that you're in a very good shape. I would keep your stops tight and just be very leery of, for sure, anything above this level here at $1.3343 is definitely not, that takes us off the bearish campaign by many reasons. But that was something right now I don't see happening. We'll see how it opens up Sunday night or afternoon later on and how it trades into Monday. This area here, I think, is going to be a little bit of trouble though, because this could be the area where we find the bottom and then all of a sudden we start to get a rally. So just because it took out this one low here, this is more on the short term. On the longer term, this market has made a higher move high and still has not made a major lower move low. So we'll see how this pans out for you, Lock Power. Do you have any other questions about any other currencies? So this helps jump ahead to this one. So like we were definitely looking for somewhat of a bit of a turn after the dollar has been under siege for the past week and a half. When it comes to the U.S. dollar Canada, it doesn't look like it really wants to do that. But now we've had divergence of all the currencies for the past couple months now. So it's not unlikely to see for maybe a day or two where all of them batter the dollar. So they're all bullish, and the dollar gets hit against the Canada, the euro, the pound, you name it. Then you have other days where it starts to flip, where you may be slightly bearish in one, slightly bullish in another one, or super bullish in one and super bearish in another. And that's for its own fundamental reasons. Mainly, I think that's because the coronavirus is off the table. Now it's more the collateral damage of things on how they are starting to show their heads into the economies of the world. I think that's where we're trying to watch out for that impact right now. So for the U.S. dollar, you're welcome, Lock Power. Now let's go on to our next major U.S. dollar. Okay, so U.S. dollar Canada is wrapped up there. So now, like I said, we have divergence with the U.S. dollar. The U.S. dollar, while it's been getting beaten up by the euro and the pound and what have you, the U.S. dollar yen up until Friday had been a bull. Now, this is where I think you have to think about what's going on. Like, is there really a turn, and is the dollar really getting beaten up, or was this a major, just a one-day kind of event? While the dollar has been going lower versus most currencies, the dollar has been rallying versus the yen. and in a very nice way, where it's been sideways to lower. I mean, it's still in an overall bear trend for the U.S. dollar yen. But while the dollar index has been pretty much under siege since the end of September, beginning of October, not so with the Japanese yen until Friday. So I think that Friday there's multiple fundamental and technical reasons why the dollar was sold off. And meaning that you have the U.S. dollar yen went down, the euro U.S. dollar went up, the pound U.S. dollar went up, the U.S. dollar Swiss went down. So I think that because of those initial reasons that all the currencies joined together in unison, it's a one-day event. It's a Friday event. I wouldn't really hold credence on it, like especially with the U.S. dollar yen here. Except for Friday, you have been making higher move highs and higher move lows, and still are coming off of a higher move high and not making a lower move low yet. So unless we fail from here at 104.94, I would use caution being a bear for the U.S. dollar yen. Now, if all the currencies really start to make a run at the dollar again, and that would be for major fundamental numbers or reasons. Now, we don't have, like we started out this webinar going over the numbers of the week. There's nothing of really serious significance for the U.S. dollar, at least until the end of the week. So I don't think that any of these numbers on the other side, meaning like for the euro or for the pound or even for the yen or what have you, where these currencies are going to have any type of number where it beats expectations or loses expectations, where you would see any type of extreme strength versus the U.S. dollar. So this one here, we're still bullish in the long run. I would be very cautious. Wait for a signal. As far as I'm concerned, proven itself to be a short-term bull. We are definitely looking at this high from 2 sessions ago. Any breach of 106, 125 here definitely has us on the rally path. Below here at 104.94, that's where we have the negative bias. And then let's see, we can take this and get a reversal, because that was only for that short-term part of the analysis. So yeah, and then a breach of 106, 125 definitely has us very bullish the U.S. dollar Japanese yen. Now remember, the U.S. dollar Japanese yen has a very good chance of going, and let me put this into a better perspective. I'll draw. So let's say that it comes here, chops around, and comes out like this. Well, if it was to do something like this, where it comes out and gets above 106, 125 and continues this higher move high, the higher move low campaign, that doesn't mean that the euro and the pound and the Swiss are going to be also getting beaten up by the U.S. dollar. I think if anything, it's very likely to see the U.S. dollar getting beaten up by those other currencies, and the U.S. dollar actually finding strength here against the yen. And that's for other fundamental and technical reasons. So that's just one thing to be very focused on if you're trading multiple currencies or you're trying to get a bearing of what's going on with the dollar. It would not be, the yen, the U.S. dollar doesn't have to break versus the yen in order to be in sync with the other currencies. It can go and do its own thing, and I think most likely it will. And it's very normal for the U.S. dollar yen to be in a counter trending manner as opposed to most of the other high-end or higher, larger currencies versus the dollar. So let's look at the other currencies in this trading zone. We'll look at the Australian dollar, US dollar, and as you can see, this market as a whole had an explosive end to the week, taking out those highs that were set at the high that was set earlier a week and a half beforehand, and now showing a lot of strength. Now in the intermediate term, this market is still a little bit sideways to bearish, but in the short run, it is proving itself otherwise. So I key off of this low from 3 sessions ago to find out if this market is bullish or bearish. Anything above this maintains the bullish posture. Now the Australian dollar, US dollar, I would be also very careful with as far as being bullish. There's a lot of stuff going on over in Australia that fundamentally could really put a dampener on any type of bull run for the Australian dollar, as far as against any currency, let alone against the dollar. Strong oil prices are good. If we get an uptick in gold, I could see it staying strong. But if we have another sell-off in gold and a sell-off in oil, like if we get oil back down to 35 or even closer to $30 a barrel, and then see gold tank another like few $100s, I could see the Australian dollar, US dollar making newer move lows down here sooner than taking out other highs up here. So this would be that big high to look out for. Anything above here, I think, is going to have this market obviously back on the major bull campaign, but right now I don't think that that's going to happen. Like I said, there's more fundamentals and technicals that show otherwise. So any failure from this low from 2 sessions ago, I think will definitely have us continuing the sales forecast. That's New Zealand dollar, US dollar is next. So New Zealand dollar, US dollar, like a balloon underwater. This one exploded really, really strongly, just like the Australian dollar and a couple other ones did. So like I said, the dollar was getting pounded on Friday. Now remember, Friday's volume is thin. We are coming into the beginning of the fourth quarter. There's all kinds of reasons why the dollar could be adversely affected by any type of major one-way selling or buying going on. And since we have a major unison, that also gives me a reason to believe that this is a short-term, not necessarily one-day event, but it's one day that I wouldn't just count that as the major reason for what's going to happen. If anything, this could be the last gasp before we have a big turn back towards support. Excuse me, and we shall see what happens. Now, New Zealand doesn't have quite the issues that Australia does, although COVID-19 seems to be coming back to be an issue in New Zealand, but not as badly as in other countries. So I think if anything, sideways to higher is not unlikely for this market, especially since it's made this made a higher move high, lower move low, lower move high, higher move low, now higher move high. This is a total indecision market. This market is saying we're going sideways, we're all over the place, we don't even have a clue, you know. So these are your two major support swing points. If we were to take out this high right here, that would be the only thing that really, really gets me going as far as being bullish. But right now, I don't see that happening. I see it being more of a choppy sideways trade. And as far as that trading zone, like I said, they're the one currency who's kind of insulated is the proper word. Australia is the one that's very vulnerable right now. The U.S. dollar yen, it's one of the major currencies in the world to begin with. It's already got its own things going on. But the New Zealand, which a lot of times trades in tandem with the Australian dollar, just like how the U.S. dollar yen is not trading in tandem with the other major currencies versus the dollar, the New Zealand dollar, U.S. dollar may become similar to that. So methodology. And for there to be a divergence between the Asiatic currencies is totally normal. They don't all have to go the same way, that's for sure. So now let's look at the U.S. dollar Mexican peso. So spring break's not happening next year, or it is with some colleges, but some are saying it's not. And then we have the holidays coming up. Who's going down to Mexico for Christmas? I don't know. I know I need a vacation, but it's not happening. Let's see. So we have the Mexican peso that is bashing support. Now, this market's been in the bear market since the coronavirus volatility really kicked up back in March. This market was getting hammered long before the coronavirus hit and was trading down in the teen handles. And now it looks like, excuse me, that it does definitely not want to stay very strong. This is when it really kind of blows my mind how this is falling versus the peso. But the trend is your friend. So right now it's making lower move lows after making lower move highs and lower move lows. So I just have to say the trend is your friend. Continue to go with it. This is another reason where I think there is divergence in the currencies. And this is also going to show in the dollar index, where the dollar index may bounce versus, say, the euro, excuse me, the pound and the Swiss, which is the biggest weights, so that'll definitely show direction, but it's not going to be an explosive bounce. So that's when I say, like I've been saying for a while, that I'm not a dollar bull. I'm just not overly a dollar bear anymore, that's for sure. And the dollar bullishness, I think, is going to come slowly and not be that major in every currency out there. So we're going to end with the Turkish lira before we go back to the euro and see even that one. So this is where I'm starting to think that what happened was a profit-taking move, excuse me, on Friday. And if you look at how like this market fell off here and then boom, 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 trickled up and kept going, I think that's what we're going to experience over the next couple of days, the next couple of sessions, and we'll see how it pans out. But it's very likely that the dollar will start to round its whack and at least in the short run have a bounce versus most currencies, except for perhaps the U.S. dollar, yen, and even the NASDAQ, or not NASDAQ, the New Zealand dollar, U.S. dollar. So let's go back to the euro real quick in closure. And by the way, don't forget to subscribe to our... So because this has entered this resistance band, just like some of the other currencies, this is what's given me the reason that I think that the dollar index as a whole is going to start to turn over the next few sessions, but not that every currency is going to get weak versus the dollar, that's for sure. We've highlighted the ones that we think that will and the ones at price levels to take a look at, and we're going to see how this week manifests. So make sure you always come to forex-trading-unlocked.com for your Forex information, and also subscribe to our YouTube channel, and also check out the book High Probable Japanese Candlestick